What's going on, traders? Please make sure you like and subscribe to this channel if you like some of the information that you're going to be hearing. Also, if you stick to the end of this video, we're going to be giving you some secrets on how you can be profitable utilizing this information. All right, stay tuned. What's up, everybody? So today we're actually going to be talking about what to avoid getting in the market. Okay, three topics, three parts of this that I'm going to explain. Of course, there's multiple parts when you're talking about what to avoid in a market, but seeing these particular things over and over again, training your eyes to see these things, will help you avoid majority of the problems that most people have in the market. As I told you guys before, you need to know what to avoid, because if you don't, you're simply gambling. And I don't know about y'all, I'm not here to gamble. I'm here to know exactly what I'm doing, what I'm getting into, and going for the highest probability trades, those safety trades, those trades that I go with the trend, those vectors, the 22, the AFP, which is away from peak, those type of trades I look for, so that way I can get the highest probability possible of winning. While most people are trying to trade like 50 pips, or I shouldn't say 50 pips, but 50 different pairs, or trying to go in the market 50 times, I'm taking lesser trades, but having a higher percent accuracy, a higher percent growth, and more money in my pocket, because it's not hit and miss. I'm a sniper, and that's what we're training to be, snipers. Okay, so let's go ahead and get into it, guys. All right, so the first thing that we're going to talk about far as what to avoid in the market is this: trading back to the peak on third level. What does that mean? Trading back to the peak. Okay, so let me go ahead and explain this to you. I'm going to draw this out. All right, so you got high right here, right? Boom, then you got another high. Boom, but wait a second, that high wasn't broken. So that's letting us know that this is our peak. What most people get caught up in is, because you'll see a lot of scalpers, you see a lot of people saying, man, I just need to get everything. I need all the pips in the world. I need all the money. I need everything. We get aside ourselves. Okay, so what happens is we'll try to get in right here, trading towards the peak, even though we know the trend is now changed. But we want to get everything. Guys, this right here, this type of trading is called death. Okay, people get caught up in this all the time, trying to catch as many pips as they can. More or less scalpers. Okay, scalpers get caught up on this. They don't see the overall trend, and that's why a lot of people get lost in their trades. They're unsuccessful with their trades, because they try to trade this. So we want to avoid all this thing. The reason being is because we don't know how far this thing is going to go up before it comes crumbling down. And the thing about it is, the people that are trying to trade this up, once it changes on them, guys, it never comes back. So let me go ahead and draw this example for you, okay? So it goes up, sets the peak, does not take the peak out, and boom. It can do this. This could literally be only 3 pips. This could be 5 pips. It could be 10 pips, whatever the case may be. But the thing about it is, you don't know how far it is going to go up before it drops on you and never comes back. But for one thing for sure, is not going to take out this peak. So we never want to trade towards the peak, back to the peak high. We want to trade with the trend, going with the trend, right? That is what we call our safety trade. And those are high probability trades. So let's go ahead and take this to the charts. I want to make sure you guys can see this thing. All right, so going to the charts. I'm going to pull up one of my favorite pairs right here, so that way you can kind of see it. Oh, hey, right here, right off the back, you can kind of see what I'm talking about. All right, so you see where it's a high, but then boom, we have our peak up here, right? We have our peak. Now, a lot of traders would try to trade this going back up. They would try to trade this going back up, but not know how far this thing is actually going to go up before it just drops on you. Guys, we got to get smarter than that. If we are trading with the trend, we will only get stopped out once. I shouldn't say never get stopped out, but we only get stopped out once, compared to getting stopped out every single time going against the trend. So you don't know how far this is going. Let me go back an example. Look at the trend. We see our EMAs, the EMAs at the bottom. We see how many times it goes down versus how many times you would, if you would have swing this, if you would have swing trade this thing, how much profit would you have gained versus just going against the trend? You would have went against the trend right here, got stopped out. Went against the trend right here, got stopped out. Went against the trend here, got stopped out. Because you don't know how far this is going to go. Versus you just simply going with the trend. Of course, yeah, it goes against the trend for a little bit. You take a little bit of heat, but what happens? It keeps on going up. Goes down, take a little bit of heat, but it keeps on going up. A little bit of heat, it keeps on going up. So these are things that we want to avoid. Once the peak has been set, and you see that, it does not take out that previous peak, that is letting us know that that is third level. Okay, so let's go ahead and go in further analysis with this. All right, what is third level? Because a lot of us don't understand the difference in levels and stuff like that, and that's okay. So that's what I'm going to explain right here. Third level is when a peak has been set, and then you notice that the following day, that peak, it's not taking out. That is what we call third level. Also, an identifier to help you see if there is a third level is when you also see when these EMAs are spread out. Okay, that's an identifier. That does not mean that, oh, the EMAs are spread out, so it's third level. No. What you want to see is the peak has been set, and then that peak was not broken. Okay, because you'll see also where the EMAs are together as well, but the peak has also been set and then not broken. So looking at this right here, check this out. We see all our EMAs kind of bunched together, right? And it was going down. It was a lower low, lower low, boom. It sets this peak down here. We wait and see, and then we notice that the following day, boom, what happened? Oh, snap. This peak wasn't taken out. Something's happening. You look at the next day. Oh, snap, this peak wasn't taken out. So this is letting us know that, hey, this is third level. Because this peak wasn't taken out, it must be a reset about to happen, and it's about to change direction. What happened? What also do we have? We have our level 2 confirmation, 15 to 200 crawls. This peak is not taken out. This peak hasn't been taken out. So that's third level. We're on third level. It's a reset. This is going up. What happens? This thing just continues going up, continues going up. Then sets a peak, goes against it. Boom, this peak is not broken. Going down, down, down. That's levels. This is how levels are defined. When a peak is set and then the following is not broken, that's letting us know that's level 3. And then we trade with the trend. Peak set, not broken, trade with the trend. Peak set, not broken, trade with the trend. But overall, we know that this thing is going up. So even with this, I wouldn't even trade this. I wouldn't trade that counter trend. I would have waited until it went right back with the trend because I know where my EMAs are. But that's how you define third level. That's how you see third level, is when a peak is set and then you notice that that peak is not broken. That peak high or low is not broken. That lets you know you're on third level and you don't want to trade back to that peak. You want to trade away from it. You want to trade with the trend away from that peak because that's what's going to give you a profit. All right, so let's go ahead and go back to the whiteboard. So then we can talk about the next thing that you need to avoid. All right, so the next thing that you need to avoid, counter trend trade. I talk about this all the time. Okay, and despite this, of course, I don't mean to talk about scalpers and nothing like that because you can still scalp with the trend and still make a killing. But when you try to trade against the trend, guys, it again is death. You don't know how far this thing is going to go. So you need to just try to just scratch this. We are trend traders because we go for the safest trade. We go for the highest liquidable trade out there possible. So we want to go with the trend. But of course, you're going to have knuckleheads out there. Okay, we're going to have knuckleheads that want to go against the trend. You know what I mean? You want to go against the trend, that's fine. So I'm going to give you the percentages on going against the trend and where you should put your take profits if you are going against the trend. trading. Okay. Now, I do not recommend this, but, I'm just going to give y'all information because, we all know that knowledge is power. So, all right. So when you're going against the trend, all right, your first take profit is going to be the water. All right. That's your first take profit, which is what? The 50 EMA. All right. Your second take profit is going to be to the Mayo, which is what, guys? Our 200 EMA. Now, there are different percentages with these trades where they're going to hit the take profit, if they hit the take profit. Okay, so 75%, you have a 75% chance that the market will come back and respect the water, come back and pull back to the water and hit that take profit. All right, for the Mayo, you have about a 35% chance that it's going to pull back and hit the Mayo. All right. But the thing about this, guys, is why do you want to risk 75? Guys, 75 in the real world, would you risk your safety? Would you jump in a car? Would you put your kids in a car that was tested and only had a 75% what is it, like a safety rating? 75% safety rating, or 35% safety rating on their car once they get in an accident or a crash? Would you put your life or your family's life on a 75% chance? I pray that you would say no. I would pray. Some people would be like, well, I got that husband. I'll just throw him in there. I don't care, but I would hope that you would say no. So why would it be different in the market? Why would you go off of 75%, 35%? I want to go for the highest probability out there. Going with the trend, you're looking at a 90 to 95 to even 100% accuracy, to where you don't have to worry about losing or much drawdown. And if there is drawdown, you know that you're still good. Why? Because you're trading with the trend. So that's why it's so important to trade with the trend, because it's the highest probability out there. So let's go ahead and look at the market so you can see what I mean by the take profits. All right. Because normally what you'll find, again, is that price will always kind of respect the Mayo and also the water. Okay. But as you've seen right here, look, you see that price, this is counter trend. First take profit is what? The water. Boom, it hits the water. You go up with the trend, counter trend, go to the Mayo. Go to the water. It went to the water. All right. But look at this. You have this long area right here where it never went back to the water or the Mayo, where somebody would have got stopped out because they would try to counter trend this. Somebody tried to counter trend this area right here. Somebody tried to counter trend this area right here, thinking that it was going to go back to the water. And what happened? It never even touched it. It kept on going up. This kind of went, that must have been news. That went down to the water. But still, how many times did it actually hit the water in this little segment? Hardly any. It didn't really even touch the water. So why, instead of us looking for the counter trend, why not have traded this whole thing up? Guys, hold on. Let me even measure how many pips you would have gotten if you would have just simply looked at your EMAs, saw that they were at the bottom, so it's an uptrend, and rode this thing up all the way up to the peak. Sorry, my computer's lagging. That's over 200 and almost 50 pips. That's 250 pips that you would have gained just simply riding the trend. So why would you want to risk 75 to 35% of your safety, of your livelihood, of your account to a 90 to 95% if you just simply go with the trend? Okay, so avoid this. Try to avoid counter trend trading as possible. Okay, all right. So let's go back to the charts. Let's go back to my whiteboard. I need my whiteboard. Let me go back to it. Boom. So lastly, the last thing that you want to avoid, unless you understand it, is sideways chop. Now, what is sideways chop? Normally, you'll see the market kind of move like this. Creates a high, low, and just trades in between. It's chopped up. This also is a signification that there is a reset happening. This is where the market makers are trying to decide which direction they want to go. If they want to continue on with the trend, or if they want to break that and do a reversal. So what happens is they collect orders each direction. Each direction, they're grabbing orders, buy, sells, okay, until they decide that, okay, well, the buyers have overpowered the seller, so we want to go for a sell. Why? Because that means that's more money in their pocket. So you got to think about it like that. You know what I mean? So we don't want to trade this. Being the reason why we don't want to trade this, unless you understand it, okay? You can trade this, but you got to understand it. But I'm about taking the highest probability out there. And I want to see when the market shows direction, because once it shows direction, I know what to trade then. I know exactly what to play. Because now it's showing me if it's a buy or a sell. So I know to place buys. I know to place sells because it's making a direction. We can see the overall direction. So that's why we want to avoid this, all right? Now, you'll also see indications where the market does something like this. It will go up, it was consolidate, create a new high, low, and then set a peak, go down, go back up, and then trade right where it left off, like literally like this. It will trade like this. And what happens 9 times out of 10 when you see this is that you'll find that the market has actually hit its quota on pips. All right. Yes, I did say that. The market actually has a pip, not a pip goal, but it has like a what's the word I'm trying to look for? Like it has a area of when, how many pips it can use a week, I should say. It's like a goal, I guess, or a structure that they can have for the week. All right. So they're only really allowed like 600 pips per week to spend. So you'll see a lot of times if the market, did its high peak and then it went down and did its low peak and it's kind of close to 600 pips, you might find that they start consolidating at the end of the week. You'll be like, man, it just stopped moving. Like it was moving and then it just stopped and now it's just consolidating. Oh man. You know what I mean? So what happens is they hit their goal. They hit the 600 goal. Or what happens a lot of time with this is that you'll see and a lot of people don't know this, you'll see that on the base pairs, if they are consolidating like this, that they are working the cross pairs, all right, and lining the cross pairs up before they move the base pairs. A lot of people don't know that, okay? So just be aware of that. So let's go back to the chart so that way I can kind of show you guys this example. Okay, so let's try to look for a chop city, chop city, chop city. I want to see a really, really good chop city. I want to find a really good one for you guys because I know I got some people that kind of get misconstrued on things. This is perfect right here. I'm gonna zoom in on this thing. So you see this right here, you can trade both ways on this. And a lot of people's like, oh, I can, catch mad pits on this if I'm scalper. Actually, you could as a scalper, because that's what you want to look for. When you're looking at this thing, you're looking not to stay in for full ADR. This is not the time to sleep on. You cannot sleep on this. And that's why I don't like it, because you can't really sleep on it. You literally have to stay up. And you're only staying in for a certain amount of pips, about I think around 10 to 15 pips going both directions, all right, that you want to play when you're doing this. But the thing about it is, why do all that? And you don't even know which direction it's going to break out. It can easily say, okay, we're collecting enough sales, so we want to go up now. And then boom, it just breaks out. Because what happens is, once it collects enough orders, this thing just goes full ADR. It breaks out. It don't just break out of this area. It breaks out of this area, as you've seen right here. It collected enough. They collected enough. Oh man, Now I gotta go back. Hold up. Sorry, guys. I gotta zoom out again. But what happened with that was it collected enough sells and buys and decided, okay, we're ready to go ahead and shoot the direction that we want to shoot. And that's what they did. And they went full ADR, like completely blew that area going down. So can you imagine placing a sell at this point? I mean, placing a buy at this point, and then all of a sudden, boom, it never comes back at all. Never comes back. Well, look at this. It actually, you know, a couple weeks later, it let those it let those people out. For those ones that was holding a position, they was like, yo, I'm gonna hold this thing. I know one day it's gonna come out. One day this year is gonna come out. And finally they were like, oh, okay, we're gonna let these guys out of the market over here. So let's go ahead and just let them out. And that's what it did. But why go through all this? That's what I'm saying. Why go through all this headache, all this stress, and, you know, just get yourself worked out? Just avoid this choppiness. Now, this is also when you see stuff like this, like the EMAs are kind of close together and it's consolidating like this. It's not, there's no direction. You can't see the direction. This is called reset. Now, I want you to imagine what reset kind of sounds like. Reset, when you think in your mind of reset, you're thinking start over. You're thinking, again, what I just said, starting over. You're thinking, a fresh, clean slate. You're thinking, let's go ahead and just clean up. Now we're forgiving people. We're forgiving everything. We're trying to make amends. So now they're resetting. They're resetting, they're cleaning up, they're starting over, they're starting it fresh. Now let's decide if we want to continue on doing the same thing that we were doing, or simply doing something different, going against the trend and creating a new trend, either a new buy or a new sell. And so that's what the reset is. So again, another way that you can understand that you're in reset is when the EMAs are close together. Also, when you see this choppiness right here, when it creates a high and it creates a low and it just trades in between that. It trades in between that till finally they decide which direction they want to go, and boom, they just blast off. They blast off. Okay. And they, like I said, once they do that, you understand what you're trading at that point. Once they, make that they break out, now you know which direction you're trading, and you're just trading with the trend. At that point, you just go with the safest trade possible, which is trade with the trend. Boom, you're making your money. You're getting what you need to get. While most people are getting $100, staying up all night for this crap, you're only trading once or twice and getting the same amount they're getting. That's the thing about it. Like scalpers, they'll stay up all night, or they'll stay up looking at the screen all night, get $200, $300, $500, and we're doing the same thing and going to sleep because we understand the safety trade, we understand AFP, we understand our setup and our signature trade. So just avoid these things, guys. That's what we want to avoid, and that's what I just wanted to share with you guys tonight. Simply avoiding the extra hoopla, the extra crap, the getting emotional and adding emotions to your trades when you don't necessarily have to. Let's avoid that. So that way we can grab the highest probability out there to be successful. I want to see y'all success. I want to see y'all grow and win consistently in this market. All right. So that's going to wrap it up. Y'all have a good night.